Of DBS Vickers, where he's the head of equities research. And don't forget that Derek is calling for a 30% plus correction in 2010. So Derek, we left off talking about the two sectors you might want to avoid in this correction, or more susceptible in this correction, are Chinese property and bank plays. But when I look at your stock calls for long-only funds, they are just banks and they are property. We're looking at BEA, Bank of East Asia, and also Hang Seng Bank. But first, let's talk about the property plays. And Henderson Land, it's been making a lot of headlines here in Hong Kong with its, marketing scandals, shall we say. So let's talk about Henderson Land. This company also has exposure to the mainland. So why is this a better property play than the other names? First
of all, now the thing is, the bottom line is we are recommending, long-only funds. So they have to have stocks. So now for those names that, if we do see a 30% correction, it's going to be across the board.
Right.
That means no stock will be spared. So what we are trying to identify are those names that can outperform. So Henderson Land, because of the fact that, I'm more optimistic about the Hong Kong property market versus Chinese property market, as well as they do have a lot of agricultural land, and they just pay a premium in terms of the conversion of a major land site in new territories.
Yep.
So in terms of valuation, they are not overstretched.
Okay.
So these are the reasons. We think that Henderson Land may outperform some other sectors. Let's say some of the consumer names that with 30, 50, 40%, 30 times PE. So definitely these stocks are very highly overvalued.
Okay.
But for Henderson Land, it's relatively cheap compared to on a relative basis.
And some are impressed with their land premium. Let me just ask you, with Henderson Land trading at $58 right now, how much higher can the stock go?
Our analysts expecting maybe 10-15%. But the thing is that, we are talking about relative performance. We are not talking about absolute.
Okay.
Yep.
Well, let's talk about Link REIT. This is a company that manages shopping centers, also parking spaces here in Hong Kong, Kowloon, and also the new territories. It's pretty cheap, trading at just 10 times. EPS growth looks pretty good, 37% gains. Operating margins, 66%. And all 14 analysts that cover the stock say buy it. What do you see for Link REIT?
High yield. Because for 2010, I would say that the market will continue to be highly volatile and range-bound, at least before the major correction. Then, we should go for laggers and we should go for defensive. And Link is definitely a defensive stock because the operation will continue to be stable and improving. Because of the fact that, at IPO time, the performance was way too bad. So they are just improving from very low base, while at the same time dividend yield is high.
Okay, now quickly, I want to talk about Bank of East Asia. Of course, this company controlled by David Lee. There was a run on this bank back in 2009. You can't forget about that. Up 109% in 2009. But looking at its PE off the scale on the Bloomberg system, we're looking at 131 times forward earnings. This cannot be cheap.
Now, for Bank of East Asia, it's all about M&A theme. So we have been talking about this, for a long time. And then, our analysts don't think that, the theme has gone. So we will continue to see, on and off, we will see this kind of news in terms of M&A, and that will trigger kind of, re-rating in that sense. And then if you look at the price to book, ratio, kind of things, I would say that for a lot of these, smaller banks, including Bank of East Asia, are not too expensive compared to the mid-cycle. So maybe still have one-time kind of, upside compared to last peak, I would say.
Okay. Well, Derek, let's see how it plays out in 2010. As you said, maybe you don't want to see this 30% plus correction.
Exactly. Personally, I don't want my call to be correct.
All right. Because it's bad for business, so you don't want that.
But bad for my own investment as well.
Okay, Derek. Well, good luck in 2010. We'll revisit this, I'm sure, later on. Thank you for that. Derek Cheung, DBS Vickers, head of research, again, calling for a 30% correction in 2010.